And you know what? Yesterday during the press conference, I could tell that guy wasn't saying anything. Decided to take a nap. Took a nap for 35 minutes. Nothing happened. Then saw the earnings, and I was like, meh. And like, it just went for a walk. I was like, you know what? I'm very happy. I'm not getting chopped around. And then it made me think, you know what? I'm gonna sell an iron condor.
Okay,
500,
is that a put spread and a call spread? It's been a while since I did one of those.
Exactly. You short a 540 call and buy a 555 call, and you short a 500 put and buy a 485 put. So that way you cut the tails off, so that you're not like a strangle where you could get absolutely destroyed selling vol. But I mean, I don't know. This market is just chopping around. There's there's no direction here. And I have some stuff where it would do well if things go to hell, but like, I don't know. Like, it just seems like there's a lot of rotation. By the way, did you see Brinker yesterday? Brinker, oh my God, the greatest stock in the market. That and Royal Caribbean, maybe. Pull up the EAT.
Hold on, I'm gonna look. Yeah. I heard people that Brinker's Chili's, right?
Baby back, ribs. Yep.
Yeah, I heard people talking about this, but I didn't look. Wow.
You don't do restaurants?
I do, but it's like there's certain restaurants I don't pay that much attention to. I tend to do because like Brinker's exactly the kind of thing that I would miss, because it did not go on a longer term chart. It probably did nothing for, I don't know, like it was basically range bound for 9 years and then tripled, right? Like it was $50 in 2015. It was $50 in 2023.
Last decade it did nothing. What? I was shorted into COVID, covered around $20.
Yeah, of course, it had a big COVID drop, like everything in went 50 to 10, and then got to 75, came back to 50. But like, I'm not really playing trades. I'm playing investments, and you have a stock that basically did nothing for 9 years, doesn't have a store growth story, blah de blah. Is kind of in a place of where the secular move is away from it. I just stopped paying attention. I used to look at Brinker like 10 years ago. But something clearly happened.
October 23rd, it was a good investment. It went from
$30
it tripled. To $180. No, 6 times.
Out of nowhere.
6 times. Went up 6 times.
What?
It went up 6 times. It was $30 in October of 23, and now it's $182.
Oh yeah, I mean, I was just looking like since last October it tripled, or or whatever, like mid last year.
18 months 6-bagger in Chili's. Amazing.
Hey Ben, you put up some charts yesterday on the odds of some of these nominees on Trump's cabinet being confirmed or not. Is there anything you look at as far as the odds of him putting tariffs on Canada, in particular on oil? Anything that the market's betting?
I mean, I think if you look at the discount between the Canadian oil
and the WCS, it's still around $12.
Yeah, exactly. Yeah, I think that like some people would argue that it should be $25 if it was like full on tariffs, that discount. So I guess it would say 50-50 or whatever, like less than 25%. But that's one way to do it. I think the Canadian dollar is another way to do it. It's sitting there flat for a while at 144.
Yeah. We talked about this a couple of weeks ago, and it still seems to be the same case, that the market seems to assume it's sort of posturing more than actual reality, that they'll put tariffs on crude oil imports from Canada.
I mean, I think the market's assumption is that there'll be some kind of tariff, but like basically he's using these as like a stick to get people to do what he wants them to do. And then I think there'll be somebody who balks, and then when they balk, he's gonna put the force. I mean, you saw that with the Colombian guy this weekend, right?
Oh,
he was like, hey, you're not gonna take our people okay, I'm gonna just go full ham, and then that guy like literally reversed course in like an hour. It was the fastest political reversal I've ever seen in my life.
Yeah, he folded right away.
Like a
Okay, I'm
cheap
gonna
suit.
get us started. First, I'm going to blow my nose. I'm still the walking wounded today. Hi, welcome to the Beats Roundtable. I'm Berna Barchet. I'm a little sniffly. Apologies for that. Today is January 30th, Thursday, January 30th. Our group is here and ready to talk the markets and our best ideas. With me today are Bob Morris and Ben Bry. I guess we didn't say who was going to go first. I'm going to throw it to Bob. And
Sure.
you can catch us up on what you're thinking about today in the energy patch.
Sure. Thanks, Berna. So, we're watching these gas names here. I mentioned on the show on Monday that right after the open, we bought or added to our positions in Expand Energy and EQT. Both those stocks are up 3% plus since that purchase on Monday. And I've been watching these names, hoping to buy some more or add to my positions there because you've got natural gas prices are back down to around $3.10 now, which is a huge pullback as the market's looking past now this cold weather that we've had, and we're about to enter into February and then March, and you're into the spring. But while gas prices have done pretty much what we thought post this spike following that cold streak, the stocks have maintained strong momentum. And I think part of it is investors looking at still the demand we're going to see from these AI data center build outs, despite everything else that's happened in the market this week, and just the momentum. And Bakes has talked about EQT on a technical basis, how that one continues to break out. So, maybe we don't get a chance to buy these cheaper. I don't know. I'm watching them here. I think you do get a chance, so I'm just being patient. Like I said, I added to them on Monday on the big pullback, and I'm just looking to see if we get another pullback to add to those names of which we have positions in. The other thing we're watching here, and Ben and I were just talking about, is on CNQ. That one's been a little bit of an underperformer, not hugely, but a little bit here, just on some of the fears around the U.S. putting tariffs on crude exports from Canada into the U.S. Remember, CNQ is a Canadian oil producer. And, again, we think that's, at the end of the day, largely posturing. And the market, if you look at the WCS, the WTI differential, it doesn't seem to indicate that the market believes there's going to be tariffs, or at least it's not reflecting that today. So, we're still watching that. And what I said before, if you get CNQ, if it dips below 30, I'd be backing up the truck. So again, we're watching that one. But so basically, I'm not doing anything right here. I'm being patient. I'm watching things. We got a great opportunity on Monday, and we're just seeing how things play out here near term, particularly on natural gas with it back down to 310. We can see natural gas dip below $3 here in March just on shoulder period soft demand. So we're watching that very closely.
Got it. Are inspired by Ben's "Make Volatility Great Again" hat? Are either of these names that you would consider selling puts on to get into, or are you just more interested in waiting for those levels?
I'm still waiting for those levels. And again, on the puts, like to see them pull back a little bit to get more premium on, a put. The great technical support level on EQT is around 45. We're almost at 52 here. So if I were writing puts, I'd probably be writing $45 puts, but I'd like to get more of a premium looking 3 months out on that. And on EXC, it's 95 seems to be the strong support level. So those would be the levels that I'd write puts on, but I'd rather see the stocks pull back before doing that, get some more premium in here.
Got it. So thanks for that. I'm gonna move on to Ben, who shockingly has a vol trade, given his headwear today.
Yeah.
What you got?
No, I was looking yesterday at some of Microsoft's flat since last February, right? And then if you look at like all the Mag 7 in the last 2 months, they're just chopping around flat. Although Meta's actually
Not
the
my
one
favorite
that's
one.
that one has done the best of them. But I mean, I just think that it's like things are chopping around, and maybe it's a topping process. And like I'm sympathetic to the bear case, but who knows what's going to happen. In the meantime, you have all these tariff things that Bob just talked about, and I don't think they play themselves out until April or May. And so I was just thinking about it that you can take in like $7 for a short iron condor of 500, 485 and 530 or 540,
Ben,
555, which means
Ben, why don't you explain? I mean, I could too, but why don't you explain what an iron condor is? Just let's not assume that everybody knows what it is.
oh, okay, so you would short a 500 put and buy a 485 put on the Nasdaq, the QQQ. And then you would short a 540 call and buy a 555 call. So that way you're cutting off the tails. Like, it's not a strangle where you're just betting on short vol outright, but you're betting on it staying in a range. And I just think that we keep chopping around. It's just a way to generate some income. And I don't know, like, we just got through the biggest day of earnings. I guess we have Apple tonight, but then you get the buybacks coming back in force in whatever, a week or something. I think that the impacts of Trump was talking about will be kind of negative. So you could just see, just a lot of chop, a lot of headlines where it's down, and then, deep seek, and then the rallies. And, until we get something that really is convincing one way or the other, I think the vol sellers will be in control. So, I'm not a huge volatility seller, but this seems like it's okay, just to generate a little income. And I just look at the stock charts and I see, things are, like yesterday's earnings were for the most part good, but then you can poke holes in them. Like even Meta, the depreciation expense is lower despite higher capex. And as a retail analyst, you know what that means. That means that they're extending the useful life, which is funny to talk about companies extending useful life. But I
I think
can
the
say,
other hole to poke there is no buybacks, right?
well,
You know,
there was no buybacks,
no
and
buybacks
companies
there.
a lot of capex. Well, they are no longer the capital light, we're giving you the money back stories that they were. They're riskier, these are capital expenditure. They look like Bob's E&Ps at this point. You know what I
Mhm.
mean? And I think that there's going to be more chopping around, but their businesses are still strong, right? Like let's not like act like these businesses aren't still in like strong shape at this point. So it's hard to like, unless we get a multiple compression event where people kind of like, we saw a little bit of it, right? Like on Monday, there was like some assumptions were challenged, but kind of bounced right back. And here we sit. I mean, Microsoft's down 5% today, actually, though. What'd you think of that, Berna?
I don't own Microsoft. I am, as I said, I'm holding on by a thread. So I just listen to Meta because I own Meta. I was not doing any extra credit yesterday. I was sleeping, so I haven't really looked at it. To be honest, so I can't answer
Yeah,
that. I'm just
yeah. I
I'm
mean,
doing the least this week because I'm not feeling great. But you mentioned Monday. I mean, it just this week feels like a month. First of all, because the
oh
tone
my
on
God.
everything on Monday, it was basically the end of the Mag Seven, and I mean, you and I were talking before Meta, earnings. I was like, I have such low basis stock in a taxable account. What do I do here? And I decided to do nothing, which I thought was stupid, but turned out to be the best thing. But Meta was fine yesterday. It was, I mean, the Q4 was fantastic. I mean, they blew the doors out. They sandbagged Q1 as they normally do, and they had tons of capex, which is not a surprise. No buyback was a surprise, but people are reacting to it pretty well. So Monday, I wouldn't say the glass was half empty. The glass was like three quarters empty, and like clearly people are approaching at least Meta with like glass half full today. Maybe a little glass half empty on the Microsoft, but like the sea change in sentiment from Monday to Thursday, just it's kind of schizophrenic, and kind of argues to why your Condor trade might work, right? Because
Yeah, and I think the one thing that you could take away was that 2026 capex is going to decelerate, and I could bet I
from
could not
Microsoft, yeah.
No, for
That was the
everyone. Like Meta implied it's going to go down to 17% basically. Like it's a sharp deceleration. Google and Amazon I think are at like 9 to 12 and Microsoft's down to 9. So the CapEx recipients like it's gross decelerating and that's if they maintain market share and maintain pricing. And we all know that it's hard to maintain pricing in when growth isn't gangbusters, right? And like so the Nvidia short story I think is the most interesting. And as everyone knows, or not everyone knows, but so you guys know, I wrote up Nvidia short at 130 last June, and I was just basically did the math that hey, the margin structure required to justify this is just not going to hold. Like I gave them 20% growth for 5-7 years or something, but you needed these like super margins to maintain, and you had to assume like a above range multiple in order to double your money in like 4 years, 5 years. So like the math just is just too much in essence. Like they can do well and do nothing. And if you think about it, that stock is down over the last 7 months, but the market's traded pretty well. And so, like the market might be distributing money into new areas. And we were laughing with Berna before, Brinker, Chili's, and Royal Caribbean, and some other names that are U.S. domestic service-based consumer businesses seem to be pretty hot.
Royal's
Banks
not
have been
totally
pretty
domestic,
hot.
but yeah.
Yeah, okay,
Royal's
fair.
not
But you know what I'm saying?
financial,
US dollar based, I should say.
yeah.
Okay, like their revenues are in dollars, their expenses are mostly in dollars. They just don't pay taxes. So that's what you mean by that.
Well,
Like
no, but I mean, Royal's got giant operations in Europe and Asia. That's what I'm saying.
Oh yeah. Well, that
But,
Asian
but I
that used
mean,
to be the big story. The Chinese Asian cruising and for China for Royal. I feel like where's the status of that now? Are they still
well, I
like
mean, it
pushing that?
really sucked, but they're going to be putting new ships there. So everybody is. I think it's finally coming back, but yeah, I mean, Brinker's an interesting one because literally the stock did nothing for 10 years, and then tripled in the last 6 months. Like it was 10 years sideways, no store growth. Honestly, it just fell off my radar screen because it wasn't a good investing name and wasn't a good trading name. So whatever happened there, and I need to look at it, literally took people by surprise because people like me who focus on restaurants just stopped looking. It would be like if Kohl's did something exciting. I've stopped looking at that name too. You can't, there are hundreds of names. You can't look at all of them. Some of them just seem like they're asleep,
But I think it's a space. Texas Roadhouse, Darden,
Well,
they've all traded well.
the Texas Roadhouse, totally different kind of name, but that is a growth name. And I think people, they're opening stores. And it's a concept that people like. Chili's, back from the dead, basically. This is one of
They
those
hit
rare.
they hit on an appetizer. They hit on a product, which is like sometimes that happens, and that's what we were talking about with American Eagle. All you got to do is hit one product, and the stock can be, fantastic. I mean, look, they also delevered. They did a bunch of smart stuff with like avoiding labor costs. But what I'm trying to say is restaurants have
Yeah,
been
people
good,
are looking for new areas. There's definitely a shift,
except for Dave and
potential
Buster's.
shift.
Dave and Buster's is one restaurant that's not done well.
Hey Ben, back on the tech side, Apple. Are you still fading that here, or what are you thinking there?
No, I literally we shorted that 2 days ago,
Right.
and I was like, oh, Apple's up 219 to 235, and we shorted like 235.50 or something, 235. And it was at 240 like an hour after the show, and I was like, Jesus Christ. And I never make money shorting Apple. Then the next morning it was like 233, 234 in the pre-market. And I was like, I'm out of here. I'm going to take my buck and I'm out of here. It was 239 by the end of the day. I mean, look, I think there was a short cover there. I think there's a lot of people short Apple, long the rest of the stuff. And then I think that Apple cart got turned over on Monday. And so the positioning of pod shops is such that when they get out of the exit at the same time. and they blast stocks, way beyond where they could go. So my idea is fade. You did get like a $5 or $6 fade from Wednesday night to Thursday morning, but like I don't know. Honestly, they're going to start buying back stock after earnings, and then it's just not worth it. Honestly, it was a cheap lesson to remember. Like, there's easier ways to make money in the market than shorting Apple.
Mhm.
And so I don't know. Like, I think that if you're going to short stuff, you really want to look at in that room is Tesla and Nvidia. I mean, Tesla 25% of Tesla's earnings were unrealized Bitcoin
I
gains.
saw
Okay.
that. Yeah.
Like,
Unbelievable,
right.
yeah.
It's unbelievable. And
Yeah.
like, I live in between LA and Palo Alto, and there's Waymos all over the place. Okay. Like, Waymo is what they call a robo taxi. Yet, despite Elon talking about robo taxis for, I don't know for how long, but it's been talking about it for a long time, there's still no robo taxis. Right. And so, they have China exposure. Their deliveries were flat. Like, I just don't understand Tesla as long here, and Nvidia for having decelerating growth, and they're just pricing too much in. I don't like that either. I have not liked that. It was a great run, and they've done well, but I think that within the Mag 7, those would be the two that I don't like. Apple, I don't like, but I'm not going to mess with because they're a monopoly, duopoly, rent seeker. Um, Microsoft, I don't really have a strong opinion. Meta seems to be one of the relative winners, and Google, you know, it's kind of whatever. And I just think that like it doesn't seem like those stocks are really going anywhere in aggregate. Like they've had some runs, they had some pullbacks, but like we're kind of like since last July in aggregate, they're kind of flat to down. Like Meta being the best one. So
Well, I think that's
uh,
the point. I mean, I think I wrote a piece about this like in the very beginning of 2024 is that you can't, people got into looking at these as aggregate. And if you're trying to think about like fund flows and sector, flows like in the market, sure, look at them as an aggregate. But if you're picking stocks, you know, in energy, I could tell you that it's very unlikely that Exxon would be up 20% one year and Chevron would be down 20% one year. Like short of some like ecological disaster with liabilities happening, it just doesn't work like that because they're correlated by the underlying commodity. But like these companies are only there are some correlations across them, but they're in totally different businesses. And like, I think people trying to make a buy Mag 7, sell Mag 7, call, is, there are different factors driving them. I mean, what does Tesla have to do with Meta really?
I mean, they're both at the top of the market, and one of the
Yeah,
biggest
so
drivers.
it's a fun, like if you're doing a macro fund flow thing. But
Yeah,
if you actually look at the stocks, there were giant dispersion in their actual performance. The difference between the top and the bottom one every year for the last 10 years has been or last few years has been, about 50 points, I think,
well,
in return.
they're all consumer facing names with the exception of Nvidia and Broadcom, right? Like they all sell to the consumer, and
Right.
so
So it comes out in the
they have a
70s.
they have a cyclical component to them, whether it's advertising or actually selling.
I mean, I
Um,
would say
and
Microsoft is consumer facing, but the part that's been driving it is not consumer facing.
Right, and they all have a cloud. Most of them have a cloud business too, right? So those are simple. I get it; they're not the exact same, but I just think that like the way that that money's
Tesla
allocated.
will be mostly driven by how many cars it sells and how profitably it
No,
does
it's
it,
so much. It's
and
so much
like and
smoke that Elon can push.
hype
Yeah.
around Elon, which is actually another point I was going to make to you is like I would agree with you on a fundamental basis that Tesla's the one of the two best shorts here, but I don't know if you can short Elon as long as he's this close to the White House.
I mean, it's
I
turning
mean, I
into
think
sort
that.
of a meme stock.
What's that?
It's sort of a
Meme
meme stock now.
meme stock, and if they force a TikTok sale, who's like in pole position right now?
Microsoft apparently, or Oracle.
Or maybe Musk, So,
I don't know. I mean, he owns
I just
Twitter.
think
Why would
there's
why
too
would he
many.
buy TikTok? Why would he buy TikTok? He owns Twitter.
Because if you got it at a below market price, if you got it at the right price, then it's just buying an asset. And video, and they're totally different formats. I mean, a video format versus a text format are completely different audiences, different mediums. Like they're completely different. They're just both social media, but with different, from an advertiser perspective, there is no better Gen Z advertising platform than TikTok. So yeah, they're complementary, not competitive. But and I don't think he should be the buyer. But if you wake up and he's gotten, somehow gotten a deal on that, through, you would think it wouldn't be through Tesla, but if it was, I don't know. I'm making up a scenario, but I'm just saying I feel like it's hard to short him while he's this close to the White House.
I mean, I don't disagree, but I think it's in the price. And we shorted it at 478, and it's been a good short since then. It's down 20% since the Fed meeting. So, I don't know.
Well done.
In a sideways market, that's a pretty good outperformer. I mean, I just don't see when the multiple's this high and 25% of your earnings are unrealized Bitcoin gains, where's it going to go? I mean, it's $1.5 trillion. I just don't really have I'm not worried about that. Look, it tried to rally yesterday and it's already back to 390. There's no bid there. There's no bid.
I'm with you fundamentally. I'm just, the exogenous risk of it all.
Well, that's what part of what trading is.
Yeah.
You gotta take the risks you want.
Well, we've gone far afield. Anyway, so just going back to your initial trade before we wrap it up. So you're making a bet on lower volatility, and you're doing so. Would you say lower volatility or a range-bound market kind of thing?
I think it's a range-bound market. I don't really love the price of volatility, but I just look at, we just passed the earnings and things chopped around. We just passed 2 months, just chopped around. We got through the Trump, chopped around. I don't see a growth story. I think growth's going to slow. I mean, look, Trump's talking about freezing spending, freezing jobs, potentially tariffs, and I think there's just a lot of uncertainty. So there's probably some hiring in the private sector. People are waiting to see what the rules are. As entrepreneurs, it's hard to plan if you don't know what the rules of the game are. So I think until we have some certainty, and it sounds like this tariff, he's saying February 1st, but if you look between the lines, it sounds like April 1st. And, we got a little bit of buyback coming amidst a little bit of slowdown weakness. And, the dollar's kind of strong. The yen's strong today. And so there's just some cross currents. I could see things fall apart, but at the same time, just seems hey, I take in 750 and I risk 750. Okay. So it's all right. That's what is that? It's 12% or something like that. No, sorry, 12%. It's 120, 130 basis points. It's not bad. You just pick it up for a month and a half, or what is today? It's February 1st, or is it the last day of the month?
Jan 30.
Okay.
We got one more.
Yeah. So annualized, it's 12% basically.
Mm-hmm.
So I don't know. It's better than a T-bill. And you can also trade around that as well. And you're just hey, I'm just doing something to generate yield in a sideways market. Now, look, the argument against it would be, hey, we're going to break out from here. But do you have a good reason why we're going to break out? Is probably what I don't really see other than.
Well, I think if the tariffs on Canada and Mexico dropped on February 1st, we would drop, right? Maybe.
I don't know.
That's priced in at this point, because
I think some of that's priced in. I think at least half of that's priced in, right? So yeah, maybe some. But what does that flow through to? Explain to me what you think. I think Bob C and Q would be the way I would rather short, or something like that. That's directly affected rather than the broad market. Maybe the broad market gets hit some, but again, you're talking about the $500 is 5% down. I mean, do you think we'd go more than 10% down?
Probably not. I'm just throwing it out there. You're saying what could happen in,
No,
that
I
would,
know. I'm just trying to play this out
yeah,
with you.
more than 5%? Probably not.
It just seems like it's just sticky right now. Like I don't know. Like yesterday was very telling. Like, hey, these earnings come in weak or shy, and then they just bid them right back up. I mean, I don't know. Until the dollar, I think this will be my argument. The dollar has to roll over. And I guess yesterday, Jay Powell basically said nothing. So the Fed's kind of sitting there on hold. And so until you see the job market or, some inflationary numbers really come in, they sit there on hold. The ECB cut 25 basis points this morning, and the yen they're actually raising. So that could eventually take hold, that the liquidity is starting to roll over. But, it takes a little time. And so that would be the way I would see. If you're really bearish the U.S. market, you have to be bearish on the dollar, basically, because there's so much foreign money that's sitting in the U.S. markets. So that would come out. And that's what happened after the .com as well, right? Like we had high rates, high dollar, high equity market, and then they all kind of rolled over at the same time. So who knows? It's an interesting time, but I just think that I talked to a lot of people this week, and there's very frustrated traders out there. Let me put it that way. Like choppy markets can be very frustrating.
Frustrating that their stocks aren't up, or that their shorts aren't down, or both.
Well, I just think people putting on trades, like you try to play breakouts and then it just goes the other way. You know what I mean? Like I was talking with our colleague Charlie, and he's like, man, it's been a frustrating, month or month and a half. And I think there's just a lot of that where it's like, if you're willing to play the range, and that's what I've been doing for about, I don't know, 2 months, two and a half months, it's been fantastic. But if you're playing the breakout, buying vol has been an absolute disaster. Or trading on for it to break down has been a disaster. You've had a couple good moves, but you had to do it at the top of the range, right? I shorted that DeepSeek play last week, but we were at the all-time high last Thursday, right? Mm-hmm. So when you short from asymmetric points where you're at the top of the range, there's good trades. But that's the only thing that's really working in my mind right now, other than Brinker. Brinker is just...
that and Brinker. When in doubt, trust in baby back rate.
I wish we could play the song right now. It's the greatest jingle. Their whole business model is basically one jingle. Oh, did we lose Berna?
I think she froze.
All right. Well, I guess that's it, guys. I'll call it from here. Thank you very much, Wall Street Beats. See you soon.
Take care. Feel better, Berna.